All right, welcome everybody to the latest VARC Solutions webinar. We're going to talk about how to avoid embezzlement in your small business. This is one of those unfortunate topics that we quite frankly don't like to talk about. We would wish this topic wouldn't be something we would want to even talk about. But the reality is fraud, embezzlement does happen. It happens far too often. And, as business owners, as leaders in a business, we need to make sure that we're taking the right steps to minimize the risk of this, prevent it from happening if possible, and then also just know what to do when it happens. So we've got a lot of great content to share with you today. Glad you're here. Let me go ahead and share my screen and I'll kind of go through the agenda for today. So as far as the agenda goes, by the way, I'm Brad White. Sorry, I sometimes forget to say that. Hi, I'm Brad. I'm the owner. I'm the CEO of VARC Solutions, and I've been in the QuickBooks and QuickBase space for 25 plus years. Love it, and love also working with small businesses as well. In terms of agenda, we're going to talk about this whole topic of fraud and embezzlement. How bad is it really? Going to give you some actual use case examples from our own real world lives here at VARC Solutions, where clients have reached out to us either for help recovering from embezzlement, or are in the middle of it, or trying to prevent it and need help setting up controls and best practices. And so we'll talk about that. But how bad is it? We'll talk about how people actually steal in QuickBooks. These topics can obviously be applied to other accounting systems. It doesn't have to be just QuickBooks, but I'm going to talk about a few things that are specific to QuickBooks that we can put in place to minimize fraud and embezzlement. We'll be talking about controls and best practices as well. And then also how to spot problems, like how do you know if something's happening? And then last but not least, what to do if you suspect something. The goal, of course, is really to protect you, to help you spot those problems before they become bigger problems, and also how do you reduce the risk of fraud before it happens. In these webinars, we usually do have some questions throughout the webinar. If you do have a question, feel free to put it in the question panel. We will answer those during the webinar. If I don't get a chance to answer it before the time is up, we will follow up with people after the webinar. I did mention that if people are interested in a recording of this webinar or the slides, happy to share those. We will share those after the webinar as well with everybody who registered for today's webinar. And then so you also have the chat panel. So if you do have a question or you just have a comment, feel free to put it in the chat. And I'll try to be calling those things out as we go during the webinar. So let's go ahead and get into a couple of the examples that we're talking about. We'll talk some examples, and then we'll kind of reinforce that with how bad this problem really is and why you should definitely be concerned and taking action now. First story, again, it's a real story. This actually happened. We know folks that did this. This is what I would call story number one, inside fraud. There is a CFO that's signing checks, and there's a stack of checks that they're signing, but because there's so many and he's in a hurry, he's not paying attention. He's signing all these checks. He's just kind of flipping through them, signing them. And in this particular case, there was a trusted internal accountant that just added another check in there to themselves in the stack of checks because they noticed that the CFO wasn't paying attention when they were signing the checks, figured it wouldn't get caught. And they were actually able to take that check, deposit that check. It was about $6,000. And you would think, again, as a CFO, that they might be thinking about that and checking for that. But it just goes to show you when there is trust within an organization between people that are doing these types of roles, that's something that can be taken advantage of. Obviously, this was later caught at some point, right, by an office manager who just smelled something a little not right here and was able to do something about it. But that's one that happens, and that's an example of insider fraud. Let's talk about another example, but this is one that's an outside external fraud. An outside party forged a check They figured out the bank account routing number and checking account number, and they were able to submit a check that cleared the bank. Now, the good news is this is one that didn't cost us anything, so to speak, because it was caught within 2 days because in this particular scenario, there was daily rolling bank reconciliations. So we weren't waiting until the end of the month to reconcile the checkbook. We were reconciling in sort of real time every couple of days. And that is one that was caught within just a few days. The bank was able to reverse the payment, and then obviously started their whole investigation process. But if that had been 30 days later or 45 days later before it was caught, it might not have been something that the bank would be able to recover. So thankfully, with some of the controls in place, we can, again, minimize these problems. Here's a third example, another one of insider fraud. There was a front desk person that had access to the check stock and was writing checks. So think of it like this: writing checks in the real world, not necessarily within the software, but writing checks to himself in the real world, made out to himself for whatever the amount was. But when that check was recorded into QuickBooks, it was recorded to a different name. It was maybe recorded to a vendor or just some other more legitimate name within the company or within the vendor list. And since that person was also doing the reconciling of the bank account, he was easily able to cover it up. Okay, that actually ended up costing over $200,000 over several years when that check writing process or check writing scheme was taking place. Okay, so if you don't catch it early, this can actually majorly add up to a lot of money. One last one, and then we'll kind of get to the summary here, and that is, here's another scenario where there was external fraud, an outside party that was pretending to be the signer on an account, initiated 4 separate large transfers via fax, believe it or not, even those things still exist apparently. 4 large transfers via fax to the bank, and at the organization that was actually doing the reconciling of that account. Didn't seem unusual to them. They had a very large bank account balance, and they were just transferring money from savings into checking because they knew the bank balance was getting lower. They just thought it was business as usual. Obviously, should have been a little bit more thoughtful on that. Obviously, that would have been a better thing to do and be. But that loss ended up being over $1 million worth of fraud. So you can see that there's no one way to do this. There's no one way for people to steal money. And I'm going to share a number of additional ways, but this is the extent of this. So how bad really is it? Well, here's the summary. The median loss per case for a small business is over $145,000. Now, obviously, some of these are super small. Obviously, some of them are a lot bigger. The median case is $145,000. How many businesses are impacted by this every year? About 57% of small businesses will experience some form of fraud in every year. And so the moral to that story is, if it hasn't happened to you, be careful because you're next. Let's hope not, right? And then the third point here is, who does this? Like, is this just some random person out there that's wanting to steal from you? And the answer typically is no. The typical answer is, it is normally an insider. Okay, obviously not exclusively, but normally it is someone inside. That is an owner of the business. It is a partner or co-owner, if you will, of the business. Maybe it's an office manager. There's a bookkeeper. And I hate to say it, but it's also very often a family member. Just because we have somebody in our family that we trust to, quote unquote, do our books or write the checks and pay our bills, doesn't mean they are not susceptible to fraud. Okay, so even if you've got somebody that's been there for 20 years and they're your mom or your grandmother or whoever's doing these things, it is absolutely possible that they could be stealing money. And so don't think because you trust them that you don't have to think about it. You need to be making sure that you have trust when it's applicable, but also back that trust up with internal controls and processes so that you minimize the risk of this happening. All right. So let's talk just generally a little bit. So I gave you some specific examples. I want to talk just generally real quick, and then I'm going to do our first poll for the webinar. So there are a couple of different categories of fraud and embezzlement, just so you're kind of seeing the whole picture here. The first is that there is theft of assets, and that could be money, obviously. That's very most common, right? But it also could be other company assets. It could be computers. It could be monitors. It could be vehicles or trucks. It depends on how big your organization, whether that's something would go missing or noticed or not. But those are things that oftentimes get stolen. Misuse of company resources. In other words, using company stuff for personal reasons or for personal benefit. We'll talk about some specific examples of what that might look like, but that is also common. Bribery, God, I can't even talk. Bribery and conflicts of interest. So sometimes this is happening within an organization, but it's also happening with someone inside and some outside. Maybe there's some personal leverage that's getting applied to that person in the business. Maybe it's two friends and they get together and there's some sort of like, hey, if you do this, I'll give you this. Bribes and conflicts of interest are a big problem, and they need to be watched for. And then last but not least, financial statement fraud. And this can go both ways. There are companies that are over representing their financials. Some are underrepresenting their financials. It could be related to tax evasion, could be tax fraud, or it could be trying to sell your company for much, much more than it's worth by inflating your financials. So there's a whole lot of different ways that fraud can happen. But let's go ahead and get to our first poll. And then we'll also just kind of stop at that point for questions. If anybody has a question, feel free to put it into the question panel or put it in the chat panel, and we will get to that. So the first poll question is, have you experienced fraud? Let me load up the polls here, and I'm going to launch the first poll. You should now see that on your screen. And go ahead and take about 30 seconds here to answer this first poll question. The question is, have you experienced fraud? Maybe in your current business, maybe in a prior business, maybe no, but you may be a little suspicious that something might be happening right now, or hopefully, no, this has never happened to you, and you can be thankful for that. So give you about 5 more seconds to go ahead and answer that, and then I will show the results to everyone. Almost there. 5, 4, 3, 2, 1. Okay, we're going to end the poll. I'm going to show the results on the screen here. You should be seeing the results on your screen right now. Yep. So the good news is 56% of you have never experienced fraud, and that's a good thing. And it looks like a couple of you in each of the other categories. Yes, in your current business. Yes, in a prior business. Maybe not, but have suspicions. So thank you for sharing those results, and appreciate that. And again, for those of you that have never had fraud happen, I appreciate you coming to the webinar, because you are taking a proactive stance now to protect yourself. So that is very awesome. All right. I'm going to stop my screen sharing just for a second, and I'm going to go to, I want to talk about just in general about a couple different things here. So just give me 1 second here. And that is, we're going to talk a little bit about how people steal in QuickBooks. The goal being that we want to protect you. And if you know how people steal, you can watch for it. There's an analogy that people use in the banking industry when they're trying to detect, fraudulent cash, right? Somebody brings in a $20 bill that's not like a legitimate $20 bill. They don't show people, the bad ones. They show people what a real $20 bill looks like, because if you can look at the real $20 bill long enough, you'll be able to detect it when something is off. Okay, so there's some similar concepts here. We're going to talk about how people steal in QuickBooks, but that's so you'll know that something is off. Okay, all right. Let's and also again, let me just pause there for a question for a second before we go to the next topic, and that's talking about how people steal. If you do have a question, if you have a comment, feel free to raise your hand. Let me know on screen, and we will make sure and get those questions answered or talked about while we're here. Okay, I'm just going to look at the question panel here to see if there's anything in there. All right, not seeing any questions, but if you do, again, have them, let me know, and we'll make sure and address those. Okay, I am going to share my screen again, and let's talk about how people steal. Okay, let's see. I think everybody should be seeing my screen right now on how people steal. Good. Okay, so how do people steal in QuickBooks? And again, we're talking about QuickBooks as sort of like the context, but this really truly could apply to any other accounting system, because some of these are accounting controls that may or may not be in place. Some of these are software controls that may or may not be in place. So this could apply to other accounting systems, but let's talk about QuickBooks. First off, creating fake vendors. Okay. In other words, whoever is in control of entering, creating vendors, entering bills, paying bills, it's possible for someone to create a vendor, okay, enter a bill for that vendor, pay that bill for that vendor, mail out the check. And so, it's actually happened before where somebody will create a business, okay, they'll go register a business, they'll go register that vendor within the accounting system, they'll enter the bill, they'll pay the bill, they'll be able to get that check and deposit it as a legitimate check into their bank account because it's got their business name on it. But instead of it being a real vendor, it's an employee controlled vendor / bank account. Okay, happens. How about another one? What about modifying vendor bank details? This is where we have a legitimate vendor. Bills are getting entered and paid in the normal course of business. But if you've got an employee or you've got somebody who has access to these records and can get in and change the vendor direct deposit information, for example, the bank and routing number, and maybe they change that to be their own account, it's very easy for them to basically pay themselves through that direct deposit. And then all they have to do is delete the bill in QuickBooks, and there's no evidence that there's a bill that still needs to be paid. Okay. This is going to, by the way, going to get married or paired up with the whole concept of checking the mailbox. And we'll talk about checking the mailbox here a little bit later in the webinar. But if that same person that is doing that fraud is also the person that's answering the phone from that vendor, they can make up excuses. They can delay things. They can tell them the check's in the mail, right? So when that vendor is complaining about not getting paid, they can delay that and keep stealing money from the company. It happens very, very commonly. Okay. Payroll fraud. This might not happen in companies where there's only a handful of employees, but if you start getting into the 50 employee, 100 employee, and now there's less awareness about who all these employees are. Let's say you've got somebody that's in there that is processing your payroll. Can they go create a non-existent employee, pay that employee, and the reality is that money's getting put into their own bank account? Yes, it happens. Or let's say you've got folks that are getting paid hourly. And again, you've got somebody that's exclusively in charge of payroll, and they're going in and saying, well, okay, I'm getting paid. Let me just add some extra hours to my paycheck that, if there's nobody watching and if there's nobody approving those hours, then they could just keep, inflating their hours every week. Or let's say that person is also able to give bonuses, commissions, and there's nobody approving it. There's nobody watching it. They could just keep adding a little bit of bonus here and there to their check. Maybe it's every time the boss says, hey, can you add a bonus to my next payroll? And they go ahead and slip in an extra bonus to themselves. That's payroll fraud. And that is, again, something that can happen. What about skimming cash? Now, I think in today's business, there's less and less folks that are taking cash, receiving cash. It's probably a good thing. But if there is cash involved, there needs to be precautions put in place. to control that and to make sure that there's checks and balances. But again, same thing happens, right? Cash is getting paid. They're maybe not getting recorded. That cash is going into that person's own pocket, for spending. And if there was some sort of an invoice related to that, which is why that cash was getting paid, they could easily just go in and delete the invoice. So again, there's no record of anything being owed. So nobody's going to be calling and complaining. Nobody's going to notice that something has yet to be paid. And again, there's controls for all of these things. But again, these are just examples of how people can steal. All right, I'm going to show you another couple examples, and then we'll talk about how to get into some of the controls. Check tampering. Okay, so unauthorized checks in some way, shape, or form are getting written. And maybe, again, like the CFO example at the beginning, maybe there's somebody that's signing the checks, but they're not paying attention. Okay. Or worse, maybe you've got one of those signature stamp, what are those things called? The ink stamps that has been done with a signature on it. Never ever do that. Don't ever do that. Even if you're doing a whole bunch of checks, never ever do the ink stamps for signatures for checks. It's not good, and people will abuse it. And just think about it, right? Checks are getting written, stamping it, and they're good. So that's not something that we want to have happen. How about unauthorized credit card charges or expenses? Again, so let's say you've got somebody that has a business credit card, but they're using it for personal expenses. A good example of this is, let's say, you've got a Costco membership, and, every once in a while you go to Costco and you go buy a whole bunch of office supplies. And let's say you bought $300 worth of office supplies. Well, 200 of those are for the office, and 100 of those are for my house. And I'm going to use that for personal use. Okay. If you're not getting receipts for those charges and making sure that those are valid, that's an option where somebody could be stealing from you. Okay. Or how about this? Fudging reconciliations. So if you've got one person in charge of reconciliations and they're doing other things that are not legitimate, they can make the reconciliations work. They can do reconciliation adjustments to force things to work. They could potentially be doing journal entries to hide missing money, lots of things. But again, that's another way that people steal, is through fudging the reconciliations. And the last example that I'm going to talk about here is bogus invoices. In other words, let's say that just like that CFO that wasn't really paying much attention when they were signing checks, let's say you've got a customer who never, ever questions their invoices. Okay. You're sending them invoices, they pay the invoices. They never, ever call, they never question, they never do anything, right? Well, if somebody's really savvy in that scenario, maybe they're sending them a couple extra invoices that automatically get paid. But instead of that money getting deposited into the company's account, they've got a way where they can take that check and deposit it into their own personal account. Okay. When you'd think, well, if I've got an invoice that was deposited in my personal account, QuickBooks is still going to show that that money is due. Well, they can just go in. Again, if controls are not in place, they could just go delete the invoice. And now there's no record of it, no record of the payment. Nobody's wise to the situation. Okay. So again, those are the types of things that can happen, especially if no controls are in place. Okay. But we're going to talk about controls, and controls actually can limit each one of these examples of how people can steal. So again, let me just, I'm going to turn off the screen sharing here for a second. We're about to get into the controls, but before I do, any questions on what we've covered so far? Any comments? If you have any, you can put those in the chat. Feel free to post those questions, and then we will answer those as well. All right, just scanning through the chats and questions. All right. I don't see any, so I'm just gonna go ahead and keep doing. But if you do have any, please, again, let me know. All right, I'm gonna go ahead and share my screen again, and let's go on to the next part of the webinar, which is controls and best practices. The whole moral to this story is trust, but verify. Okay. I don't think anybody wants to live in a world where there is no trust. That's no fun. Nobody wants to feel like they're being watched all the time. And so that's not a good thing. But if even in an environment where you do trust, you need to make sure that you're verifying. Okay. You're putting in controls to make sure that things are being done right. Okay. So the quote on the screen there is that thieves are dumb. Okay. But they're also smart. Okay. They usually get caught. They usually do at some point get caught, and that's the dumb part. But they oftentimes won't get caught for several years, and that's the smart part, right? So controls prevent most fraud. But think of it like this. If you've got 10 controls in place, they're looking for the one that's not in place. They're looking for opportunities, okay? And if things aren't being watched or checked, they are just going to they're going to do the easiest one that they can possibly find. And again, you may not be aware of it for potentially even years if you're not watching, okay? Okay, so let's talk about some of the best practices when it comes to controls, and hopefully we'll learn some things along the way. First off, and most importantly, is separation of job duties. Now, in a larger company where there's lots and lots of employees, this is certainly a whole lot easier to do, right? When you've got more people doing similar roles, it's easier to have separation of duties. And then you'll have some natural sort of controls built into that. If you're in a smaller company, maybe you've only got 1 to 5 employees or 1 to 10 employees, maybe this is a little bit harder to do systematically, but it is something you can implement just in terms of human controls, job duties. We'll talk about some things like that. But this is possible even in a small organization to have separation of duties. Worst case scenario, it's one other person plus an owner. Okay. But hopefully especially as you're continuing to grow, you're going to see some other ones too. All right. So when we talk about separation of duties, let's first talk about human controls. Okay. Has nothing to do with software, has nothing to do with technology. This is just what we do in an office with people sitting in the office. What do we do? Okay. So first off, you might just have a simple job description. Whose job is it to do this versus this? And what I recommend at a basic level is to have more than one person involved when there's money coming in or going out. Okay. So for example, one separation of duty would say, hey, one person can enter the bills, but they cannot pay the bills. Okay. And you could literally just say, hey, you're a new employee, you're going to be in this role. Your job is to enter these bills, but I just want to be clear, you're not to pay the bills. There's somebody else that pays those bills. Okay. Could be just a translation communication part. If someone is in the job of recording customer invoices, they should not be the same people that are receiving the payments against those invoices. You should have someone else do reconciliations other than the person that's writing the checks and paying the bills and making the deposits, because those people can check and balance that money that's coming in or going out. Okay. So have someone else do reconciliations. Okay. Maybe you've got somebody who just does estimating and they're not the one that are doing the sales or the actual invoices. I personally recommend that if you have an owner, the owner should be doing the payroll. It's okay to have other people in the company do payroll, but I personally recommend the owner does the payroll until you get to a certain point where maybe it's less feasible. But again, payroll is where a lot of fraud happens, and so we want to make sure that the owner is involved in that process as much as possible. Or hey, about recording purchase orders, but not being the same person to approve the purchase orders. So maybe I've got a buyer, or maybe I've got somebody in my team that's doing the purchasing, or buying of software, buying of materials, buying of computers, and we use purchase orders. Somebody else needs to sign off on those purchase orders. And again, that's not a technology control. That can be just like literally anytime we're going to buy something, we need to have somebody sign a piece of paper. Okay. Let's talk about vendor communication. When it comes to vendors, larger organizations oftentimes will institute PO policies, and this is a human control. I am going to tell my vendors that we will not pay any bills that do not have an associated purchase order number with that bill. Okay. That forces a company to do PO tracking and have an approvals process related to those purchase orders. This might not be as common in a small business, but I think this is something that we can learn from larger businesses that have to institute these types of controls when they don't have awareness of all the things that are getting bought. But that is something you can do in a small business too. Just, hey, tell your vendors, we won't pay your bills unless you've got a purchase order from us. It's another control. It's a little bit of a pain, but with pain also comes a little bit more security and control. Okay, let's talk about some software-based controls. So here's where we get into limiting what people can or can't do. Saying people can do certain things, can't do certain things. You can give people the ability to edit, but not delete, or create, but not edit and delete. Those types of things is what we're talking about. And the good news is we have some great software that does have those permissions in there and capable of instituting for you. Okay, so I'm going to talk about good, better, best here. So when we talk about permissions, user permissions, what we allow people to do, QBO, Essentials and Plus, as well as QuickBooks Pro and Premier on the desktop side are what I would call good. Okay, you can be in a very broad way. You can say this person has access to accounts receivable. This person has access to accounts payable. The challenge with those product lines, which are, by the way, on the lower end of the scale for both online and desktop, is you don't have the granular control where you can do separation of duties quite as much, because when you give somebody access to AR, that means they can create invoices, they can receive payments against invoices, they can do estimates. Literally, they can do everything related to AR. Okay, so good in that you can have controls, but it's not as good as you might want it to be. And that's with, again, QuickBooks Essentials and Plus, QuickBooks Pro and Premier on the desktop side. A better is QuickBooks Online Advanced, okay, or Intuit Enterprise Suite. And then the best is actually QuickBooks Enterprise Solutions on the desktop side. So again, why are these better and why are these best? And why do we specifically recommend them when you're trying to reduce fraud in your business? And that is because QuickBooks Online Advanced, as well as Intuit Enterprise Suite, does have customizable roles and permissions. You can literally define a role called an estimator or a sales manager or a project manager, and you can more specifically tag or identify things that they can or can't do. You can also specify that somebody has the ability to create but not edit, view but not delete, those types of things. The reason why we think Enterprise Solutions on the desktop side is the best, specifically when it relates to controls, is one, the software has been around a long time, and this is one of those features that has been built out very, very well. And that is the ability to have not just custom roles, but also granular roles in terms of specific transactions. So it's not just AR, right? I could give somebody in QuickBooks Enterprise Solutions access to AR, okay, meaning they can invoice clients, they can get paid, they can make deposits, those types of things. Okay, but I can actually say within that AR role, you can do invoicing, but not sales receipts. Okay, on the payable side, I could say you can do a purchase order, but you can't enter a bill. Okay, or you can enter a bill, but you can't pay a bill. Right, so we can be very, very specific on desktop enterprise solutions. It's obviously not the only criteria or reason why you would select enterprise solutions as a software product. There's a whole lot of other reasons potentially there, but that's one specific reason that is very good. And that's also just big picture why we recommend QuickBooks Online Advanced and QuickBooks Enterprise Solutions, because they do have the better controls. Okay, let's talk about controlling the mailbox. This is another best practice. So there's a phrase that whoever controls the mailbox controls the business. So this is an area that needs to be watched and controlled closely. Now, you might have a post office box or not. Maybe you've got just a normal mailbox. And the question is, who is allowed to go access that PO box? Who is allowed to go check the mail? Okay. And the reason why this is a very, very important topic is because this is where things are sent. Notices, checks, bank statements, things like that. And so let's talk a little bit more detail about that. So if you think about it, if we have a mailbox, maybe a PO box that somebody has a key to that they can go get to, right? This is sometimes where checks are mailed. Okay. So if I have access to the PO box and I go check the mail and there's a check in there, I could take that check and maybe deposit it into my own account. Maybe I've got a separate business account that's very similarly named, to the company that is getting paid. I could intercept those checks before they really get deposited and recorded at the office. This is also where bills are sent. Okay. If you owe a vendor money, but in reality, what you've been doing is you've been paying those vendor bills to yourself because you've been stealing, and you're able to intercept the bill that keeps coming in the mail that says you're past due, and trash those bill notifications. Nobody's going to be aware of it until the phone starts ringing, right? Hey, I haven't gotten paid in 3 months. What's the deal? But again, let's say you're the person answering the phone. You're the one stealing the money. You're the one accessing the PO box, and you're the one answering the phones. Well, you can make excuses. Oh, I'm sorry. We got to get that check in the mail, or yeah, we'll get to that right away. All the while, you're simply delaying it and continuing to steal money from that mailbox. By the way, mailbox is typically where the IRS will send things like PIN numbers, security notices, password changes, new credit cards, things like that for your business. And again, if somebody has access to that mailbox, they can be intercepting that stuff before it goes to whoever it really should be going to. And again, that's just another area where thieves can operate. Okay, so be very, very careful about who you have access to your mailbox. If you have to give someone else access temporarily while you're on a vacation, that's fine. Just make sure that that's a limited time window scenario, not a new standard. Okay. All right. Let's talk about reconciling your accounts. So when it comes to reconciliation, things like bank statements, credit card statements, these are the sources of truth. Your bank, obviously your credit card company, they're not going to be stealing from you. They're going to be giving you a statement of what happened, right? What cleared their accounts. And so it's important that you reconcile your accounts, but it's also important to make sure the right person is reconciling your accounts. So this is where most errors and omissions are spotted when it does finally get checked. Okay. In other words, if money is going out, but it's not getting recorded into QuickBooks, but it still clears the bank, whether it's a check payment that was fraudulently written, or a credit card charge that was done that was a personal charge, but it's still on a business account. Those things, if I have access to the bank rec, I could not record, or I could record other things in place of it. So it all balances. Okay. So it's important to do the bank recs, but that is often, again, where discrepancies are found, needs to be done on a regular basis, monthly at a minimum. But I'm going to talk a little bit about rolling reconciliations, where you're checking the bank balance every couple of days. And again, one of the examples that I mentioned at the very beginning was a case where that check fraud happened, and it was caught because it was caught within a few days of happening, right? If this is months later, it makes it a little bit harder. Here's the thing. When you're doing your bank reconciliations, if something doesn't make sense, you have to question it. You have to ask, what is this? I don't understand this. This doesn't make sense to me. Can you help me understand what this is? If there's any suspicious transactions whatsoever, you need to go chase down receipts. You need to make phone calls. You need to ask the customer. You need to ask the vendor, what is this? I don't understand this. And again, if it's legitimate, that will come out. And if it's not legitimate, that will also come out. Here's my personal recommendation. When it comes to reconciliations, if you've got somebody else that's paying the bills, recording deposits, doing payroll, whatever, there needs to be a separate person doing the bank recs. My personal opinion is I think it should be the owner of the company, But hey, let's face it, owners are oftentimes busy, don't have time. But again, in a perfect world, we want separation of duties. So if the owner doesn't have time to do this, I would highly recommend having someone outside the company, an objective third party, another solution provider, a bookkeeping company, do those bank recs for the bank accounts and the credit card accounts so that anything suspicious is getting caught or questioned, not just taken at face value. One other thing I will mention too is within QuickBooks, there's also a reconciliation discrepancy report that will show changes since the last reconciliation. So even if the books are getting reconciled and somebody has access to check transactions, deposit transactions, and they're able to go in and delete something that maybe they took the money and they want to delete that transaction from the QuickBooks, that would be something that would show up on a reconciliation discrepancy report. And again, if this person that's stealing is the one opening the mail and opening the statements that are in the mailbox, they can make it work, right? They can make it work, and nobody's going to be wiser until somebody else looks at it. That's why separation of duties, that's why having an outside company do the bank recs is helpful. Those are very, very important. All right, let's talk about one more, and that is closing the books monthly. So QuickBooks, just like a lot of accounting systems, have the ability of doing what is called a monthly close. Closing the books helps prevent recasting of prior financial periods sort of after the fact. Okay. In other words, once the bills have been paid, the checks have been written, the banks and credit card accounts have been reconciled, the loans are reconciled, all that stuff, you could close those books and theoretically, right, the books are good. There should be no reason to go back into a prior period and change something unless there's a really, really good reason. Well, in QuickBooks, you can close the books. And what that effectively means is you're setting a closing date and putting in a closing date password to protect prior period transactions. This is something that at a minimum you should do once a year. Better would be quarterly. Better even still would be monthly. I don't recommend anything more frequent than monthly, quite frankly, but monthly at a minimum would be what I would personally recommend. You finish the books, you close the period. You finish the books, you close the period. And again, that prevents tampering with prior periods. And if something in the past was getting done, that also protects somebody's ability to go in and try to cover their tracks, okay? Or cover up the fraud that they might have committed. Okay. So by the way, one of the examples we're using here is QuickBooks, and we're going to talk specifically about QuickBooks Online here. But in QuickBooks Online, here's the instructions on the screen. It's pretty simple. You click the gear icon, you go to Accounts and Settings. There's an Advanced tab, Accounting section in there. And then in that little section, that's where you can check the Close the Books box. You can put in a closing date as of which the books are closed, typically, again, the end of the prior month. Put in a closing date password and hit the Save button, okay? By the way, little tip here, don't put the closing date password on a sticky note and have it on your monitor, okay? Or underneath your keyboard or in your desk drawer, anywhere people can find it, okay? That needs to be locked up in your head, not written down. And that will then help protect against changes to those prior periods. Now, one caveat here. Typically, if someone is an administrator of QuickBooks, and that includes QuickBooks Online, it includes QuickBooks Desktop. If someone is an administrator, it is possible for them to go in and delete the closing date and delete the closing date password, okay? So administrators basically have all access. They can kind of do whatever they want, right? So that's why the owner should be the only administrator of the company file, and anybody else in the company should be given a role that's not the same administrator level. And that, again, will keep that from getting overridden or bypassed. Okay. All right. I'm going to start my next poll here. And the next poll is, which controls are not securely in place now? All right. I'm going to stop sharing. I'm going to open up the poll here. And I want to see what you think about this one. All right. I've launched the second poll here. So the question is, in your company, which controls are not securely in place? This is a multiple choice answer. You can pick more than one thing if more than one thing applies. Separation of duties, is that in place? Limiting software permissions through roles and permissions. Controlling the mailbox, reconciling the accounts, closing the books. If any of these things are not currently in place, let me know, and then I'll share the results here in just a couple seconds. Got some great answers so far, which is fantastic. All right, give you another 10 more seconds, and then I'll share those results. Okay, I'm going to end the poll and I'm going to share the results. All right, on the screen, you should be able to see these now. So the biggest category is limiting permissions. In other words, putting in those software roles and permissions to limit what people can or can't do, as well as controlling the mailbox. Okay. Yes, those are super, super important. There needs to be one person checking the mailbox. I recommend it's the owner. Okay. Again, even if you got a family member doing this, trust but verify, right? Also looks like separation of duties. Again, and by the way, it's understandable, right? Again, if you're in a small business, you maybe have less people to do a separation of duties. You can institute more of a paper process. You know, if this is done, somebody needs to sign a receipt, and that needs to get filed away. Okay, I know that's manual, it's paper, but again, if you're in a high risk environment, might be something to do. Not having an owner or outside party do the reconciliations, 36%, and then some of you are not closing the books. Okay, again, some of these, by the way, take 5 seconds. Closing the books once a month takes 5 seconds, and now you're secure for all the prior periods. It's very, very smart to do. And by the way, I know I'm taking a few of these at face value that you may or may not know how to do some of these things. So after this webinar is over, if anybody does have questions about how do I close the books, how do I set up permissions and roles, how do I have someone else reconcile, you'll have our contact information, and you can let us know, and we'd be happy to help you with that. Because quite frankly, I don't want you to be the next victim of fraud and embezzlement. Okay. All right. I'm going to stop the sharing of that poll. I am going to reshare. Oh, hang on. I think I might have a question. Can't choose none. Sorry. Julie, thank you for answering the question. I guess you have all the controls in place. You win the prize. Perfect. Thanks, Julie. All right. I'm going to go ahead and share my screen again. I guess I just figured that somebody was going to have something they weren't doing. So sorry, Julie. Okay, let's go ahead. I'm going to continue on with the next slide here. So how do we spot problems? So I'm going to go through these. I mean, these are going to be pretty quick to go through. So these are just things just to be watching for. Number one, mandatory vacations. If you've got somebody in your company that never, ever, ever takes vacations, and they are somehow involved in money going out or money coming in, that is a red flag. You need to, especially for those types of accounting roles, you need to enforce mandatory vacations. Once a quarter is great, once a year at a minimum, but make them take vacation. Don't accept the excuse that I'm too busy, I don't need it, just pay me for the unused vacation. Because if someone is embezzling from a company, they don't want anybody else doing that work. Okay, because that's when somebody else comes in, they see it, and they're like, what's this? This doesn't look right. Okay, so it's a red flag if somebody never, ever wants to take vacation and they're in that role. Okay, review the reconciliation discrepancy reports. That's a good way of just seeing if anything has changed since the last month in terms of those reconciliations. Obviously, if you've closed the books, this is less likely to happen. But if you do see problems, again, ask for the receipts. Next one, pay attention. Make time to review things. You can't live with that excuse that I'm just too busy to check, because when you're too busy to check, that's when other people realize that you're too busy to check, and that's when they start taking advantage of opportunities that are there to steal. Also, and again, I would say this to everybody. So this is not just the owner, but whoever is in charge of looking needs to be trained on what to look for. Okay. If you're not in the accounting role and maybe you're the owner that's primarily out in the field doing sales, you may not know what to look for. Get training on what to look for. Okay. What is a normal thing? What is a not normal thing? Okay. Also, review trends. If there are certain categories that are increasing without reason, you need to check. A good example, payroll expenses are continuing to go up month after month, year after year, but you haven't hired a new employees. You haven't given anybody a raise. You haven't given anybody a bonus, but the payroll expenses keep just trickling up a little bit here and there. It could be that somebody is, especially if they have access to payroll, making themselves a little bit more money. Okay. So that's just an example, but that's also something where you should watch the trends. So if you're not getting financial statements that show the trends, that would be something to ask your bookkeeping company for. It'd be something to ask your internal person for. Okay. Here's another couple. Ask questions. If something seems off, ask. If you need someone outside your company to do a third party or second pair of eyes review, do it. Have those questions being asked so that if there's receipts to be gotten and verified, those things are happening. Also, this is I would love to say I came up with this example, but I actually stole this from somebody else that had made this example. But they said, beware the Mercedes driving bookkeeper. Okay. Now, and this is not to say that bookkeepers can never own Mercedes. Okay. Yeah, they could have worked a long, hard life and saved up and paid for that Mercedes. Maybe they got a family member, they've got an inheritance, they've got a trust, whatever. So this is not to say that if your bookkeeper has a Mercedes, there's a red flag there. But if they historically have not been driving a very nice car and then suddenly they show up to work and they've got a very nice, expensive car, could be a red flag. They're wearing expensive things. They have other expensive new things. They've got a Gucci hand purse, right? They got whatever. Those might be signs that something might be happening. Okay. Again, in and of itself, not a problem. But if you're seeing a trend there and it doesn't fit the job and doesn't fit the compensation, that might be something to look for. Okay. All right. We're almost at the end of the webinar and we're almost out of time. So I'm going to go through this last one here in terms of spotting the problems, and that is to review the audit trail. When we as a company, VARC Solutions, get brought in to help remedy a situation that has gone through a fraud or to look into a company's accounts to see if fraud might be happening, one of the very first things that we do is we look at the audit trail, because the audit trail is going to show you things that were done in the company, things that were created, things that were edited, things that were deleted. It'll tell you who did it, when they did it, and what was changed. And so the audit trail or audit log is an amazing thing and can also very commonly be used to find things that aren't right. Okay. How do you get to this audit log? Again, QuickBooks Desktop is a little bit different than QuickBooks Online, but in QuickBooks Online, you use the gear icon. There's an audit log option in there. There's then filters that you can apply. You can look for transactions created or edited by a specific person or user. You can look by date range, by specific events. Like, in other words, lists or transactions, different types of lists, different types of transactions that might have changed. And then you can, again, also view the history to see what it was before and what it was changed to. So at the beginning of the webinar, I talked about how people sometimes will write a check to one vendor, print that check, sign it, send it, deposit it, but then after that, they change the vendor name on that check. That is an example of something that would show up on an audit log. Okay. All right. So what happens if you suspect something? Okay. So if you suspect something is happening, and some of you, based on the survey results, suggested that you might have some suspicions here. Well, if you suspect something is happening, you need to make some changes. Okay. And those can be very, very subtle. Hey, Bob normally reconciles. This month, I'm going to ask Jane to reconcile. Okay. Or if the owner is not the one doing the reconciliation, hey, don't worry about it. I got the statement this time. I'm going to do the reconciliation. And if you get a lot of pushback on that, again, that could be a red flag. Okay. Ask for copies of the bank and credit card statements. If something seems off, get whoever is doing that work, have them provide you with copies of the bank and credit card statements. But here's the even more important part of this. Go to your bank account and download fresh copies, and then compare what the bank actually downloaded and what this person gave you, and see if they match. Because if they're not the same, if they don't match, somebody could be doctoring that statement to hide what they're doing, and that again is a problem. Let's say that something just doesn't look right on certain clients or vendors. A good technique in this scenario is to actually just call the customer up or the vendor up and say, hey, here's what our records show. Does that match what your records show? And that's, again, when you're going to hear that story of, well, our records show that we don't owe you any money. And then the vendor says, what do you mean? What do you mean you don't owe us money? We've been sending you past due bills for the last 90 days. You owe us like $10,000. Okay. Again, red flag. Okay. If you don't recognize it, ask and get receipts. And by the way, this is not something that should take a long time. Don't take the excuse of, oh, well, it's going to take some time to find that. Let me get back to you later. Because as soon as you walk out the door, they're trying to cover their tracks. No, they need to do that right in front of you while you're watching. Okay. Get an independent review. Have an outside firm do your books, or have another pair of eyes looking at your books. That could just be as simple as doing the bank recs. Have someone else that doesn't have a dog in the hunt, so to speak, that is taking a look at that stuff and looking for stuff that may or may not be right. Consider outsourcing your bank recs at a minimum. Okay. And then last but not least, change your logins and passwords. Again, if you think somebody's doing something, change your logins, change your master passwords so that they can't go back and cover the tracks when they get alerted to the fact that you're doing some investigation. Just make up an excuse. Say your cybersecurity folks said that this is something you should be doing on a regular basis. And yeah, you've updated the passwords, and you'll let them know next week. Okay. Those are some suggestions for you. I have one last poll. And again, so we're getting tight on time here. The last poll that I'm going to pull up is, which of the following should you be considering? So let me pull this poll up. I'm going to launch it on the screen. Which of the following should you be considering? Mandatory vacations. And again, this is multi-choice answer as well. Reviewing for unusual trends, reviewing the audit log, doing a statement spot check, getting an independent review, outsourcing reconciliations. And Julie, I apologize. I know I didn't put in a none of the above option in there. So if none of the above apply, just don't worry about answering. All right, and I'm going to give you 5 more seconds, and then we'll wrap up the webinar, and I'll show the results on that. Okay. All right, I'm going to go ahead and hit the end poll, show the results. So what you guys have said is that 75% of you should be reviewing the audit trail or audit log. Absolutely, you should. And again, this is not necessarily a daily thing. It's just if you think something's off, you might want to go check. Do a statement spot check. Have somebody else do those reconciliations. That would be really, really good. Get an independent review. Absolutely, highly recommend that. Perfect. Okay. All right. So, and again, if you don't know what to look for when it comes to an audit trail, if you don't know what to look for when it comes to those trends, definitely reach out to a company like ours. Be happy to help you, see if we can help you navigate through that, and hopefully you'll be better off as a result. All right, last 3 slides on for today's webinar, and I appreciate you sticking around to the end. Is what do you do next if you're just not sure what to do? If you have suspicions, call us at VARC Solutions. Phone number is 281-412-6914. Better to be safe than sorry. Every day that you ignore a potential problem here could be costing you thousands or tens of thousands of dollars. So we highly encourage you to take action now. Don't wait until later if you have suspicions. Our company been around for 25 years. We've got a solid certified team of QuickBooks experts. doing bookkeeping, cleanups, migrations, as well as helping companies recover when this happens. But we can also do some proactive work with you to help set those controls up to make sure that you're not being taken advantage of. Our phone number is there as well. Our email address is there, team@varcsolutions.com. We do have clients nationwide, every single industry you can possibly imagine. And then finally, we have an amazing team here, great team of folks that you can reach out to. Got a great bookkeeping and consulting staff that are happy to help you with these kind of scenarios. I hope this webinar was insightful. I hope it wasn't depressing. I hope that this will help you be more proactive and not get taken advantage of. And again, if this has happened to you, if you have suspicions, reach out to us and let us help you through that scenario. If you do have any questions, I will be sticking around after the webinar for a few minutes. Feel free to put a question in the question area, put a chat in the chat, and I'll be happy to stick around for as long as I need to and answer any of those questions that we have. Thanks for the rest of you that are have got what you need. Good luck and best of luck in your business.